A few days ago, the forward price earnings ratio for the S&P 500 went over 20 for the first time in 2 years. The forward PE calculation uses non-GAAP earnings estimates, sometimes called operating earnings for the next 12 months. I have discussed the reliability of those estimates in several posts. To determine reliability, I would take the last estimate for the next year that existed on December 31st and then compare that estimate with the actual number compiled after all of the earnings were reported. Generally, the forward estimates proved to be far too optimistic, sometimes overshooting the actual number by more than 30%. I tend to discount the reliability of those estimates. FactSet has the trailing 12-month PE as of 2/9/24 at 20.3, which is much higher than the 25-year average at 16.4 and the 20-year average at 15.6. You can find those numbers in this article, quote, S&P 500 forward PE ratio rises above 20 for the first time in 2 years, end quote, published on February 12, 2024. The S&P 500 price earnings ratio using trailing 12-month GAAP reported earnings is variously calculated by financial websites, but most have the number at between 25 to 27, which is high by historical standards, including recent history. The market needed a valuation reset, and today's inflation report provided an excuse to sell. While the 12-month CPI was reported at 3.1% with a consensus at 2.9%, the number did decline from 3.4% for the 12-month period ending in December 2023. The main problem was not the headline number so much, but core CPI remaining stubbornly high at 3.9%, and adding to that was a 0.4% increase in core CPI month to month, which was the highest month-to-month increase in several months. I do not need much of an excuse to sell stocks. I did not need do any selling today, but had already run my net outflow for stock sales this week, which will be discussed in my next post, over 3,000 prior to today. The adds to my bond portfolio this week currently stands at 22,000 in Treasury bill purchases, either bought already on Monday or will be bought tomorrow or Thursday, and 11,000 in corporate bonds maturing mostly in December 2024. I will discuss those purchases in my next post. I share the concerns of Ed Yardeni, an analyst that I respect, who recently expressed this concern. Quote, our main concern right now is that the S&P 500 may be starting a tech-led melt-up, similar to what happened during the second half of the 1990s. We are wondering whether a bout of irrational exuberance might push the multiple higher, inflating a speculative bubble in the stock market as occurred during the late 1990s, end quote. Moving on to another matter, the Senate passed an aid bill for Ukraine, Israel, and Taiwan, stripped of the bipartisan agreement on immigration that Trump killed. Speaker Johnson has already made it clear that he will not allow a vote on that aid bill. If he did, the Republicans would cast him aside as the Speaker faster than they did with McCarthy, who allowed a vote on the debt limit increase that avoided a U.S. debt default that would have resulted if the Trump-controlled Republicans had their way on the matter.